Alright, we're now going to review how we use these budgetary accounts that we have discussed to record the budget, how we can use them for budgetary control of revenues and budgetary control of expenditures and encumbrances. We'll also discuss what we need to do if we have to revise the budget, and also how we go about closing out the budget at fiscal year end. We will make use of what is called the budgetary fund balance account. It is a budgetary control account, and we are going to have the balances recorded within it. Some governments don't call it budgetary fund balance. Some call it budgetary control. This account, I'm going to refer to it in short as BFB, is a temporary account for the fiscal period. If we go back and take a look at the Excel spreadsheet that I had shared with you all prior in regards to setting up the budgetary accounts, we had said we're going to have an estimated revenues and an actual revenues account that we know about in our operating statement accounts. And then we're going to establish a budgetary account for estimated other financing sources, which is a complementary or corresponding account to the other financing sources. Again, both of these are our regular operating accounts, but these are set up just for budgeting purposes. Well, this account that I'm talking about, this budgetary control or budgetary fund balance, again I'm going to call it BFB, is also established. Alright, this BFB account is established for the sole purpose of recognizing the differences between the anticipated inflows and the anticipated outflows related to the budgetary period. And I'm going to show you how this works. As we put journal entries in, you're going to see credits to this account but also debits to this account, and then we can use those, net them out like we normally do, and then do we have a debit balance or do we have a credit balance here? Alright, so when we go to record the budget, when we put in the estimated revenues, we said that the estimated revenues has a normal balance opposite of its corresponding account. So when we record those estimated revenues in this budgetary account, we're going to debit the amount into it. Well, we know we've got to have that opposite credit there for bookkeeping purposes, so we're going to credit this BFB account for the estimated revenues. Alright, so there's our journal entry for estimated revenues. When we go to record the budget and we've got some estimated other financing sources, we're going to debit estimated other financing sources for the amount of those, and at the same time we're going to credit the BFB account to reflect the estimated other financing sources in this budgetary fund balance. Now, when we record these revenues, estimated revenues, and the estimated other financing sources, we're going to do the journal entries like we have just discussed, but you also have to go in and debit the types of estimated revenues. Alright, we've talked about the classifications of revenues. For example, taxes and sales taxes, taxes and income taxes. We could have all those little subcategories, those little classifications. We would need to break all those down, so you kind of have multiple entries that you have to do when you record the budget. You've got the big number going in, and then you're going to break it down into subsidiary ledger accounts. Making sure that we use the correct classifications. We want to keep up with this stuff in great detail because the budget was set up in great detail. And later, when we actually receive those revenues in, we're going to keep up with those incoming amounts in the same level of detail and in the revenues ledger. All right, so budgetary accounting, what we're using here, we are going to have budgetary control accounts. We've got estimated revenues, estimated other financing sources. Well, let's now go look at the outflows, where we had said we're going to record appropriations when they are approved, and those get a credit. And when we've got encumbrances gets debited. Well, what I want you to see here is that I have pulled over that budgetary control or BFB account that we just talked about, and I've brought it over and added a couple more items on here. We said we were going to credit it when we debited estimated revenues or debited estimated other financing sources. But look what we're going to do when we record appropriations and when we record estimated other financing uses. We're going to debit the BFB account when we put those budget items in. Alright, so this BFB account allows us to do some things. Again, if you guys were to take the total credits and net them against the total debits like we know how to do, if you ended with a debit balance in this BFB account, you would have a deficit. You would have less in revenues and other financing sources as compared to the appropriations and other financing uses. But what if you netted them out and got a credit balance? You would have an excess available in that budgetary fund balance. Again, like I said, when I had the prior slide pulled up, when we go in here and we record these appropriations and we record encumbrances, those journal entries require subsidiary ledger entries. Alright, so you've got big number, big level, and then drill down in further. So you're going to get a lot of practice at that when you move forward into the upcoming chapters. Going back to, and I will load this Excel spreadsheet with these updated items for you, so be looking for it. This time I've renamed it and put budgetary accounting use of accounts. So there'll be a second one in addition to the one we looked at prior. Alright, so like I mentioned, recording the budget, we will have journal entries that need to be entered when we record the budget. And keep in mind that for right now, there is no impact on the government-wide statement of activities. We're going in to the funds that have a legally adopted budget. We have budgetary accounts set up for them, and we will enter the budget numbers. They're not actual revenues, they're estimated revenues. They're not actual expenditures, they are appropriations and then later encumbrances, and sooner or later they'll become expenditures. So keep in mind that there's a flow to what we're doing as transactions occur after we've entered the budget. Of special note, I do want to mention that what we're going to do in this course is we're going to follow the dual method approach. So as we move forward in this course, the journal entries will be made into the general journals at our fund level, but then also at the government-wide activities level when those are warranted. All right. Keep in mind that the fund level is where we're recording those budgetary entries. So again, when we record the budget, we're going to debit estimated revenues. And I know that's a little painful because we're used to crediting revenues, but recall that we said we're going to have opposite normal balances for the budgetary accounts. And the budgetary accounts is where we're recording the estimated items. So we're going to debit estimated revenues. And now we've discussed this budgetary fund balance account, and it's going to get the remaining part of that journal entry. So if we debited estimated revenues, we're going to credit budgetary fund balance, or the one I'm going to call BFB. Step 2, again, make sure that you go and you hit the subsidiary ledgers accordingly. You're going to debit estimated revenues for certain types of taxes, fines and forfeits, or whatever that may be coming in. Make sure you do that second phase of the recording of the budget, because that's part of it. We will be able to use this information when the actual revenues come in the door. We have journal entries to do for those. So if we are receiving cash, we would debit cash and credit the revenues and the subsidiary ledgers of the revenues. And that should say of and not or. Fix that real quick. And then if we had accrued the receivable earlier, we will debit cash and credit off that receivable when the revenues payment comes in. All right, so we're moving the numbers along. The fact that we have these estimated revenues for the budgetary accounts and the actual revenues, the revenue accounts, this is what enables us to do budgetary control and oversight of those revenues. So basically what we can do is then take those accounts and compare what is the estimated revenues versus what is the actual revenues. Are estimated revenues greater than what's actually come in? Well, that could cause us a problem, right? If revenues are not being received at the level we had originally budgeted for, then maybe we have to figure out some other financing sources, or maybe we have to start some collection efforts of some sort. What about estimated revenues being greater than actual revenues? Maybe the economy has really taken back off and our sales tax amount is greater than what we had thought or estimated it was going to be. Well, if that's the case, maybe we don't need to use some of our other financing sources. Maybe we don't need to issue any bonds or debt and incur interest and issuing cost. All right, so all of this is helpful to administration. In regards to our budgetary control of encumbrances and expenditures, keep in mind we kind of have a flow of how this process is working. We had said there's a process to developing a budget and approving a budget, and once it is approved, we record those appropriations. Those appropriations are the authorized amounts for specific things. And to do that, we've said we would credit appropriations. Again, I've shown that to you on that Excel spreadsheet. Appropriations are credited. And then later, whenever we actually issue a purchase order, we are then encumbered at that point. All right, so encumbrances, we will issue the purchase orders and we need to book encumbrances. Encumbrances require us to debit them. It's kind of like pre-expenditure or pre-expense, if you will. So debit encumbrances. It's the only one where the normal balance, for this example, debit, is the same as its corresponding operating account, which is expenditures. When we debit encumbrances, we are going to credit encumbrances outstanding. Encumbrances outstanding is kind of like pre-accounts payable, if you will. It's going to be that little temporary holding account. And again, when this transaction is entered here at the encumbrance part of our flow, we are going to do it for the exact amount of the purchase order or contract that's being issued. Now later, whenever the actual item is received or the service has been performed for us and we've received the invoice, we're going to compare the invoice to the purchase order or the contract details. Now, something to keep in mind, purchase orders and contracts don't always exactly equal the invoice that comes in. For example, what if we have a public works department that orders 200 feet of pipe at $1 per foot? Well, then that purchase order is going to be for $200. But what if the length of the pipe happens to come in standard lengths, and what actually comes in is 240 feet, not 200 feet? Well, then our actual invoice is going to be for $240, not that original $200. So our journal entries have to be done a certain way. When the invoice has finally been approved for a payment, what we need to do is reverse out the original amounts out of encumbrances and encumbrances outstanding. So whatever we did this journal entry set for, we're going to reverse it out exactly the same. And then the amount of the invoice that's actually approved, that's what we're going to debit to expenditures and credit to vouchers payable, or credit to cash if we actually end up paying it right then and there. Again, those are for the actual amounts approved. So this helps us, again, for budgetary control purposes. We can compare all of these numbers. Something to keep in mind with appropriations and encumbrances, etc. Recall what an appropriation is. An appropriation is an authorization for administrators to expend financial resources on behalf of the government, not to exceed the amount specified in the appropriation ordinance or statute, for the purposes set forth in that ordinance or statute, and during the period of time specified. Something to keep in mind here, when you're going and entering these journal entries, you may also need to be putting the fiscal year for which the items are for. Alright, so if we're talking about fiscal year 2018, then we need to say 2018. If it's for fiscal year 2019, we need to put 2019. There are penalties for administrators who overspend the appropriated amounts. Or there are penalties for administrators that make expenditures for purposes not covered. In other words, they were not approved or authorized. There are also penalties when administrators, after the date of the expenditure or appropriation has expired or elapsed, an appropriation is made. Right? If they expend money in a period afterwards, if it was not approved to be handled that way, then there could be a penalty. One other thing about these approvals of these invoices amounts right here, and when the purchase orders are issued, it is very important that the vouching takes place properly, that the validity and the sufficiency of appropriations have been checked before those things are processed. Keep in mind that I had shared with you on our Excel sheet that we can use a formula to figure out how administration and their staff are handling this process. We have stated on that Excel sheet that we can take the amount of the approved appropriations and we could subtract out expenditures and subtract out encumbrances, and if we happen to come up with a negative result, they have overspent their authority. If we were to get a positive result, then we know that they've got a remaining amount that's authorized to be spent. In regards to this encumbrances outstanding account here, guys, I highly recommend that you use T accounts when you're working through homework questions or when you're working through test questions. With the test, I will allow during this online testing for you all to have blank paper and a pencil to write with. I will likely ask you to show your ID, your calculator, and your blank paper and pen that you're going to be using at the start of the test. But I highly recommend using T accounts to help you keep up with all that. In regards to revising our budget, we will do comparisons using these budgetary control accounts of our results, comparing our budget to our actual results. We can look at our revenues all the way down to by sources. We can look at those estimated revenues by source versus the actual revenues by source. We can look at those appropriations along with what was encumbered and what's expended. Again, we're keeping all of this at multiple levels so we can really get down to the nitty-gritty and compare these. And if we see ahead of time that we've got some issues, we may need to make some adjustments. Could our results indicate that we need some additional inflows? Whether we apply for some more grants, we issue some debt, we borrow some money, whatever needs to take place in order to fulfill our budget. What if we have indications that we've got necessary additional outflows that need to be made in addition to what we already planned for? Again, do we have the resources to make that happen or not? Could it be that our results indicate that we're going to actually have to reduce our authorized outflows? I mean, that's completely possible. Maybe we cannot go get some additional resources, and instead we're going to have to back off of what we had planned in appropriations, encumbrances, expenditures. Think about that. All right, so based on what our results are and what administration gets together and decides to do, they can amend the budget. Again, there's an authoritative, legally binding process that's going to take place, and then if an amendment is passed upon the budget, then we will need to make some journal entries and adjust those budgetary accounts. Now, keep in mind, what's the normal balance of the budgetary accounts, and how can you reduce them, or how can you increase them? Normal balances increase, the opposite decrease. So keep your ducks straight, draw some T accounts, use those Excel spreadsheets, and think about what you are doing if you have to go in and do the entries to revise a budget. Last thing I want to cover here is closing entries. When we close our entries, we're doing it for a particular year end, and we will close the temporary accounts. All of these budgetary accounts that we've been talking about, estimated revenues, estimated other financing sources, estimated other financing uses, etc., all of those have to be closed out, with the exception of encumbrances. Depending on how the particular government that you're dealing with deals with encumbrances, we have a couple of options. All right, so if the outstanding encumbrances are not to be honored, in other words, the government is not going to honor those, we're going to close out any purchase orders, any contracts that have not been fulfilled by fiscal year end, we're going to just cancel them. All right, if that's the case, we're just going to close them. We're going to debit encumbrances outstanding and credit encumbrances. Just close them out. But if they are, based on the government's policies and procedures, are going to be honored, we have two possible choices. The first one, we can keep the encumbrance open. Again, having details regarding those encumbrances and in those subsidiary ledgers, what year it was approved for, that becomes helpful. We can leave the encumbrance open and deal with it as the items or services are received, like we have already discussed. If, though, the government selects to still honor them, but close the encumbrance, we would close it at the end of our fiscal year and reopen it at the beginning of the next year. So here's our journal entry for closing it. So we would close it, and then we would come back in the next year, reopen it. Again, T accounts are awesome. I would definitely be using those. Next video, I will cover accounting for allotments and a few additional housekeeping details in regards to the material covered in this particular chapter.